Hey, Joshua Thomas, Academy Mortgage here. How are you doing? Hey, just wanted to get you some quick information. It's tax season. A lot of people are filing taxes, and I wanted to remind you of some changes in my industry over the last few years that has made it a lot harder for self-employed borrowers to qualify. This is both Fannie Mae and Freddie Mac. To my knowledge, FHA has not yet followed this suit, but who knows, maybe they will. Anyway, so let me go ahead and jump into it with you. So what we're looking at, this is specifically for self-employed people who have a separate entity that's filing taxes. For example, a partnership or a sub-corporation, incorporated, LLCs. All these typically will file one of these two tax returns that has this issue. When self-employed individuals file taxes, they're typically filing as four different types. So they'll file a Schedule C on their personal tax return, and none of what I'm explaining has anything to do with that. They'll file a 1120S, so like a personal return is a 1040 personal tax return. A business tax return can be an 1120S, a 1065, or an 1120. So an 1120 is for large corporations, typically full corporations. They're a taxable entity, just like one of us is, a normal person. And so that's also not what I'm talking about today. So the two that I'm talking about today is going to be an 1120S or a 1065. When somebody has one of those two businesses, they're going to file out something called a Schedule K1. And so I'm going to walk through what needs to be on that K1 just to help people understand. But at the end of the day, if they don't have it documented the right way here, it's a possibility that they won't qualify regardless of how much is listed here. So let me go ahead and jump into it. So what you're looking at is Schedule K1. $48,560 is the ordinary business income that came through on this person's tax return, or K1. K1 functions a lot like a W-2, for example, giving people an idea how much money they made. But it can be showing income here without showing distributions, and Fannie Mae and Freddie Mac are most interested in distributions. And so if you can go ahead and look down here just a little ways, you'll see this little D right here in $68,600. That is distributions. So in this person's case, it's showing $48,000 of ordinary business income, but $68,000 in distributions, which is good. That's what we need it to say. This number is not a number that we calculate off of. It's just simply a litmus test to see how much they're distributing. Let me show you an example of somebody who did it differently. So here's another individual who has a $92,000 K1, and if you look down here, you will not see any kind of distribution. There's nothing listed here. So that would tell the underwriter that they didn't actually take any distributions. They don't actually, it shows they made the money, but that they didn't receive the money, if that makes sense. It's a little different, and businesses will do things different ways, but that is a problem. If this was all that there was to this guy's story, we would not be able to count any of his income or her income. Okay, so let me scroll down. This is the same borrower, same individual on their business. I've now gone into the business Schedule L, which is a balance sheet, and this is the next test that I'm going to go through. There's basically three tests. Number one, I just showed you, that's up here. I'm going to look for a distribution. If there's no distribution, number two, I'm going to come over here and I'm going to look at their Schedule L, which is their balance sheet. Notice it says beginning of the tax year, end of the tax year, and notice all these different assets. And then if I come down a little bit, it says liabilities. Okay, so all the total assets come up, and there's $58,900 of assets in the business. And then I come over here, and it means $58,000 of liabilities. A 1-to-1 ratio or better is what we're looking for to show that they have adequate ability to distribute. The numbers that are here aren't always relevant to the amount that's shown up here. It's just showing us that the business has liquidity and has the ability to distribute, if that makes any sense. Let me show, actually I think I stopped there. But the third option, if I'm not seeing numbers here, as a lot of tax returns often go blank right here, it has to be a fairly large company. I think it's $250,000 of assets or gross sales, something like that. We'll actually have this completed. But if it's blank, then the third test I'm going to go to is into the actual individual bank statements, and I'm looking for this number in distributions. So I'm looking for either $92,000 in the business bank statements, or I'm looking for $45,000 as an example, with $45,000 of transfers from the business account into the personal account. Does that make sense? So essentially what we're trying to do in a self-employed person's case that owns a 1120S or a 1065, I'm basically coming in here and I'm looking to document these distributions or this income before I'm able to count it for qualifying purposes. Anyway, I don't know if that confuses you or helps you, but hopefully that that is an assistance to you, especially as real estate agents. A lot of times we're filing one of those two returns. Go ahead and share that with anybody that you want to share it with, that you know who's self-employed, as they're filing their taxes to make sure they're doing it right. So in case they ever need to come in and get a mortgage loan, if they're going to be moving or investing or anything anytime soon, that they'll have what they need in order to do that. Thanks a lot for your business. Appreciate you. Again, Josh with Thomas Academy Mortgage. Have a great day.